Hello, I'm Taylor Johnson with Keller Williams, and I'd like to give you a report on the DC metro area real estate market for June. This is calculated at the beginning of July, looking back over the previous month. So you can see that our median sales price here is around 570 for the DC area, and that gives us a 13% appreciation from June of last year and 16% from June of the year before. That means basically we had like a 3% year followed by a 13% year. What will happen this year? Who knows? But I suspect it's going to be a strong year again. Closed sales are up. That means the number of homes sold total is up over the years. New pending sales right now are down. We have noticed a little bit of a softening in the market this past month, and I think that's because people are now vaccinated. They can leave their homes, they can go travel, they can go out and eat dinner, and they're not sitting at home watching their computers all the time. And also potentially folks have been in the market and bruised a little with multiple offers and not getting a property, and they decided to take a step back. So I would argue for those folks, right now is a good time to get in, because right now it is a little weak, and you can actually get a property with some negotiation. Next fall, or this coming fall, probably we'll see people jumping in again, and a much higher activity. So now might be a good time to re-enter the market. New listings are up. This is good. So there's actually more inventory now than there has been the past couple of months, which is great. That makes it easier. There's a little more options for you, and maybe a little less competition. So median days on the market still pretty strong. We've got like 6 days right now, 9-10 days, so about a week, a little bit less than a week average days on the market. You can see here that our home demand index for the region is still very high. It's a little lower than it was last month, but it's still very, very high. You can see here, if we look at it in a grade area, this is kind of like right here would be average balanced market, fairly steady. This is when we get into the orange and the red up here is when we're getting into a place where demand is really higher than supply. And that's where we are right now. Median sales price held at an all-time high, and new townhome listings were up. The condo price, so the condo market in DC has actually been relatively soft this last maybe most of a year. And right now we're seeing a pretty strong rise in that, about 8% or so. And median sales price gained about 10% from January of this year. That means if you were looking at a $500,000 home and you were waiting for prices to soften, that home is now $50,000 more at $550,000 than it was in January. So if we're looking at the whole metro area, we notice that Montgomery County had a very strong first 6 months with a gain of 12% here. The sales price held at an all-time high region-wide. Prices gained 13% from last year. Metro condo pricing rebounded about 8% from the last month. Close again to all-time highs. We're still a little under for the condo market. Columbia Heights particularly had a very strong month with a gain of, or 6 months with a gain of 21%, and Montgomery County again increased 14% year over year, and had the smallest month-to-month gain this past month since January for the last 6 months. So if we look at it region-wide, here's some good numbers. Alexandria City and Fairfax City are very small areas. They kind of skew the market. Much better to look at countywide. So we have Arlington County, DC Metro Region, and Washington, D.C. itself, 12.9% increase from June of last year, and 8% increase year to year from January of this year. So look at this chart here, the 10-year trend from June of 2012 to June of 2021. The same average price has gone up from 400,000 to 570,000. And here again, June of 2020, that was about 505. Again, if you were waiting for things to soften, the home is now almost $70,000 more than it was last year. I don't see, if you look at the demographics for the next year, 10 years actually, the average purchase first-time home buyer age is around 35. The national population of 35-year-olds for the next 10 years, it holds fairly steady. So we don't see demand going down. And because of structural issues, we don't see supply going up. Even if 50% more people started selling homes, we're not going to have enough homes for sale. The inventory supply of homes is super, super low. So all of this means it's a good time to be a buyer. It means it's a good time to be a seller. If you're a buyer waiting, don't wait. It's a good time to be a buyer. Get in and capture these appreciation rates. Look at this. If you bought a home last year, that home is now 10% worth 10% more than it was, right? I mean, you've already gained 10% value. That's money in your pocket that you can pull out of the home and use to fix a bathroom or redo the landscaping or put back into the house in some way. If you bought the home last year, it's now almost 20%, 16%, right? By the end of this year, it will probably be 20% worth more than it was when you bought it. Homes are a good investment. Even now, in this crazy market, a home is a good investment. All right, if you would like some help buying a home or selling a home or analyzing your situation, and I'll tell you straight as it is, I just had a seller who looked at me, talked to me a few months ago. May not be the best time for them to sell. So we'll just see how things go and follow the market. Taylor Johnson with Keller Williams Capital Properties and the Garcia team. Reach out to me. I'd be happy to help you and give you some advice. 202-763-2483. Thanks very much. Have a great day. Bye now.